Coronavirus, is it a dud virus or is it a tunable waiting to happen? General Motors, it is a dud company, and reporting season, it's got some dud companies as well. I'm Peter Switzer.
I'm Paul Rickard.
And we're
mad about money.
All right, Paul, so we hope that coronavirus is a dud virus, but this morning Raymond James, a finance company in America, says this could be a tunable waiting to happen in the sense that, like the Russians mishandled it, they reckon that China is mishandling the virus.
Look, hard to get a handle on that, Peter. I mean, COVID-19, I think, if you're going to be really technically correct on this.
The Corona beer company's happy about that.
I'm just puzzled by the reaction of the American stock market. I mean, we saw overnight Apple come up and warn about the impact on current quarter sales.
That's like, well, duh.
Yeah, which is not unexpected, but the market still finishes a bit high. Sold off Apple initially. The US closing in near record highs. The Yanks don't seem to be worried about it. So,
it's a dud virus, according to the Yanks.
So, every day the stats get worse. I mean, the Chinese seem to be taking it pretty seriously. It's hard to get a handle. I think, certainly we're going to see the impact in the economy here. We're seeing it in tourism. We're going to see it in the education sector. We're going to just have to be careful, Peter. I don't think we're out of this one yet.
No, and HSBC is cutting 35,000 jobs. Now, sure, it's related to the 2019 problems, but when they're looking down the pike, they'll be saying this coronavirus is not going to be good for their Asian business as well, plus the Hong Kong riots as well. So all those sort of things. This is, I think the next 2 months, the key stats will be the coronavirus stats.
Yeah, I think a bit of caution is needed. I mean, our market is close to the high. The US is on highs.
Yeah, that's another thing.
But so the money is what worried yet. But you just get a sense that maybe there's a bit more to this. But we'll play that one out.
Now, Paul, are you crying tears of blood that Holden's leaving the country?
No, I'm not. I'm just amazed that people are still. 2007 in a closed manufacturing kept some design stuff. I don't know why design stuff can't work anywhere, but. People in 2020 are worried about it. I mean, I think the biggest issue is why have we still got a luxury car tax? Yeah. The luxury car tax, which adds about $6,000 or $7,000 to your average SUV, that
about $500 million to the budget.
Yeah, I mean, we don't have any manufacturing. What are we protecting? Why are we putting a problem on luxury car tax?
The budget surplus, okay. But Paul,
General Motors, come back to them.
Yeah, what I think, look, General Motors is saying it. Well, now, Henry, explain this to me. We drive on the left-hand side, but are we right-hand drive cars? You're the expert in this sort of thing.
Well, we are, yeah.
Okay,
yeah.
But what Holden says, we're not doing right-hand drives anymore. But look, the UK, right-hand drive, Japan, right-hand drive, Australia, South Africa. There's lots of countries that have that car. I reckon General Motors is simply a dud company. And how can I prove it? I looked up the share price for 2010, $34. Share price today, $34. No change. Tesla started off $23 and is now $800. How did they miss the battery car opportunity? Because they're duds.
Yep, we shouldn't get too worried about this. And look, Australia's never going to have big scale manufacturing, too small a market. Yeah. We've got niche stuff, let's not worry about it. I mean, I find it really interesting. Consumers, Australians are the most price sensitive people in the world. They vote with their feet. They shop in Aldi because it's owned by a German private company family. Don't go Woolworths or Wesfarmers because it's a few cents cheaper. Yeah. They buy foreign cars, and then people get excited when we don't have a local car manufacturing. Absolute hypocrisy. All right, get over it. Okay. We're tight fists, right? Tight wads. We're not going to support local manufacturing, right?
No, okay. Now, reporting season. Yeah. Last week, the companies looked pretty good. CBA, JB Hi-Fi, CSL. But this week, the companies, good companies, but they're having what I would call dud performances.
Yeah, I'm not sure they're dud performances, Peter, but they're nothing.
Unimpressive?
Yeah, a little bit flat. I mean, BHP yesterday was okay, lots of cash. Not much doing on the production side. It's all pretty conservative.
Dividend okay still?
Dividend okay. Coles was pretty much as expected, but not really much earnings growth. We had Cochlear was a bit on the disappointing side. Wesfarmers today, again, not a lot of change. Great result by Bunnings and Officeworks and Kmart. Target's a debacle still. Some challenges around payroll. It's like... There's a lot. There's nothing really to get too excited. I still think the most important ones are still to come, and that's probably Woolworths, and I think Afterpay, simply because there's so much expectation. Yeah. But I'd say the one that I was a bit disappointed yesterday was Cochlear. I thought we might see a little bit better. So look, I mean, banks have done okay. It's sort of, I haven't seen the stats, but. It's sort of not brilliant. Dividends today, Fortescue 65 cents market was factoring a little bit higher. I mean, I think there's still a lot of uncertainty, and CEOs are being a little bit conservative. And coming back to the coronavirus, just to wrap this all up, it's right. I mean, if China does have challenges, it will impact demand for commodities, and we'll see that in the profits of things like Fortescue and BHP. We'll see it, Cochlear and CSL, all those companies. They have big operations. It's
and all
it's
tourism
too big.
businesses.
And tourism business. So it's got some challenges for some of our companies. There's no doubt about that.
I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.